In March of this year, Nvidia CEO Jensen Huang went on the All In podcast and publicly endorsed a decentralized AI crypto project. 48 hours later, the token was up 90%. 3 weeks after that, subnet tokens inside this ecosystem had minted over $1.5 billion in new market cap. And I'm telling you this now because I posted about this project in November of 2022 at $8 a coin when almost nobody in crypto was paying attention. Today, we go all the way in on TAO. Quick context so you know where I'm coming from. This is not a project I just found this week. On November 23rd, 2022, I wrote a thread on X called, quote, Future Tech equals Crypto times AI, where I laid out the case for why Bittensor would be one of the biggest stories in this entire space. At the time, TAO was trading under $15. I bought my position around $8. It since ran to over $700 at the peak and is now back in the 300 range after a recent pullback. I'm not telling you that to flex. I'm telling you that because the thesis I wrote in 2022 is playing out right now in real time, and most of crypto still doesn't get what this actually is. So let's fix that. In one sentence, Bittensor is a protocol that turns artificial intelligence into a competitive marketplace instead of a product that 3 or 4 companies in San Francisco get to own forever. Think of it this way. Today, if you want to use advanced AI, you pay OpenAI or Anthropic or Google. One company writes the model, one company picks the data, one company decides what it can and can't say. Bittensor flips that. It's a blockchain launched in 2021 by Jacob Steves that coordinates a global network of miners who compete to produce AI services, inference training, coding agents, storage, benchmarking, prediction markets. Validators then score the quality of their output using something called UMA consensus. The best miners earn TAO, the worst get nothing. It's a free market for machine intelligence, no board of directors, no policy team. No single company that can change the rules overnight. As of April 2026, there are 128 active subnets running on Bittensor. Each one has its own little economy, producing a specific kind of AI output. And since the Dynamic TAO upgrade went live last year, every single one of those subnets now has its own tradable token. That's the piece most retail investors have completely missed, and that's where we're going next. Here's the piece that changes everything. In February of 2025, Bittensor rolled out Dynamic TAO, or dTAO for short. Under dTAO, every subnet on the network has its own alpha token, its own liquidity pool, and its own independent market. What that means in plain English is that the free market decides which subnets are actually valuable, not the core team, not the foundation, the market. If a subnet is producing real demand and real usage, its alpha token rallies, it earns more TAO emissions, and its miners get paid more. If it's vaporware, it dies quickly. And the results have been real. As of March 2026, subnet tokens have a combined market cap of roughly $1.5 billion. That's about 27% the size of TAO itself. Let me walk you through a few that are working right now. First, Chutes Subnet 64. It's a decentralized AI inference platform, basically a permissionless alternative to the OpenAI API. Chutes is now processing over 12 billion tokens of inference per day with over 400,000 users, and it has become one of the top providers on OpenRouter. Over 9 trillion tokens processed lifetime. That is not speculation, that is real demand. Second, Ridge's Subnet 62. Ridges runs AI software engineer agents on Bittensor. Code generation, bug fixing, testing. They're targeting the $400 billion software engineering market, and their roadmap includes a decentralized IDE competing with Cursor. Targon Subnet 4 validates the quality of language model outputs across the network. This is not a roadmap, this is a live on-chain ecosystem with real users and real revenue. Now, the piece that every serious investor should be paying attention to. Bittensor has the same supply schedule as Bitcoin. 21 million total TAO, ever, period. And it halves on the same rhythm. On December 14th, 2025, the first Bittensor halving executed automatically on-chain. Daily emissions dropped from 7,200 TAO per day to 3,600. In one block, the rate at which new supply hits the market was cut in half. For context, circulating supply at the halving was around 10.5 million TAO. That's already half of the entire supply that will ever exist. The remaining 10.5 million will be emitted over the next century plus at an ever-declining rate. The second halving is already scheduled. It kicks in when total issuance reaches 15.75 million TAO, and it will cut daily emissions down to 1,800. That's Bitcoin-style programmatic scarcity, on the token that powers decentralized AI. Now zoom out. The biggest story in every market right now is artificial intelligence. The thing that goes up in AI by default is Nvidia stock. That's an $800 billion plus question mark on its own now. Bittensor asks a different question. What if the pure play bet on AI was a fixed supply, 21 million cap, decentralized asset? That's the setup. So let me get to the one that broke the internet in crypto last month. On March 20th, 2026, Jensen Huang, the CEO of Nvidia, went on the All In podcast. On that episode, Chamath brought up Bittensor directly, asked Jensen about decentralized AI training, and Jensen, instead of dismissing it the way a CEO of an $800 billion centralized AI supplier normally would, compared Bittensor to, quote, a modern version of folding at home. For those who don't remember, folding at home was the project in the 2000s where regular people donated spare computer time to help fold proteins and cure diseases. Jensen's framing was not a throwaway line. He then said, quote, we need models as a proprietary product, as well as models as open source. These two things are not A or B. It's A and B. That is the CEO of Nvidia, the single most important company in AI on the planet, saying on the biggest tech podcast in the world that open, decentralized AI is not a fringe idea. It's half the future. TAO rallied roughly 90% in March. Subnet tokens exploded, adding 1.5 billion in combined market cap in weeks. And here's the thing people keep missing. That wasn't hype. That was Nvidia's own CEO confirming the core thesis of Bittensor in front of millions of people. Let me stack a few more signals on top because this is where it gets interesting. Grayscale, the same firm that ran the spot Bitcoin ETF application, has an active Bittensor research report and an investment product for TAO. They call Bittensor, quote, decentralized AI's scarcity play, and they've published price targets tied explicitly to the halving. That's a $27 billion asset manager positioning TAO as a macro AI trade. Foundry, the largest Bitcoin mining company in the world, has been a top 3 holder of TAO since 2022 and was one of the earliest validators on the network. The same people running industrial-scale Bitcoin mining looked at Bittensor and said, we want to validate this network with our own capital. That is not a small signal. And then this year, Michael van de Poppe, a macro investor with over 600,000 followers, publicly added TAO to his personal portfolio, citing the convergence of AI narrative and halving mechanics. Stack it up. Nvidia's CEO, Grayscale. Foundry, Chamath. Real macro money. This is no longer a niche crypto bet. This is becoming the institutional on-ramp for decentralized AI exposure. Now let me argue against myself, because if you just follow the hype, you are going to get chopped up on this one. On April 9th, 2026, 10 days ago, Sam Dare, the founder of a company called Covenant AI, published an open letter pulling his 3 subnets, 339 and 81, out of the Bittensor ecosystem. His letter called Bittensor's governance, quote, decentralization theater, and accused co-founder Jacob Steves of suspending emissions to his subnets, deprecating his infrastructure without warning, and timing large visible TAO sales to moments of conflict. Covenant dumped roughly 37,000 TAO, over $10 million, in one shot. The market dropped 27% in 2 hours, close to $900 million in market cap wiped. That is real. That is a real governance fight with real consequences. And it is absolutely fair game for a skeptic to ask, is Bittensor actually decentralized, or is it the Open Tensor Foundation with a PR team? Here's my honest read. The governance structure is more centralized today than the marketing suggests. That's just true. The team has responded by proposing a conviction mechanism, locking TAO for months or years in exchange for voting rights. Whether that actually fixes it remains to be seen. The other honest skeptic concern is speculation risk at the subnet level. Most subnet alpha tokens will go to 0. That is not a bug, it is the design. The real question is whether the underlying protocol, TAO itself, captures value over time as the ecosystem grows. I think it does, but I'm telling you about the drama up front because pretending it didn't happen would be dishonest. And if my thesis is wrong about governance, the whole bull case gets weaker. Now zoom out one more level, because this is the part people miss. There are basically 2 futures for artificial intelligence. In future 1, 3 or 4 companies, OpenAI, Google, Anthropic, xAI, own every important model. They decide what it can say, who gets to use it, how much it costs, what data it was trained on, and what questions it refuses to answer. That's the default path. In future 2, AI becomes like the internet itself, a global, permissionless substrate. Anyone can plug in, build a model, offer a service, and get paid if it's actually good. No single company controls the rails. The thing most people don't realize is that Bittensor is the only credible funded live attempt at Future 2. Not a pitch deck, not a roadmap, live, 128 subnets, thousands of validators, real users, real inference traffic. A fixed supply asset underneath the whole thing. If you believe even a little bit that it's dangerous for AI to be controlled entirely by 4 companies, then there has to be a decentralized alternative. And right now, the decentralized alternative has a ticker. It's TAO. The numbers as of mid-April 2026. Price around $300, give or take. Market cap roughly $3 billion. Fully diluted valuation roughly $6.3 billion. Circulating supply around 10.6 million of a 21 million max. Exactly half the cap already emitted, just like Bitcoin after the first halving. Active subnets, 128 at the protocol hard cap. Subnet token ecosystem combined market cap, roughly 1.5 billion. Daily TAO emissions post-halving, 3,600. All-time high, over $700 in early 2024. Currently sitting roughly 55% below that high in a market where AI is arguably the strongest narrative in tech. This is not a $10 million meme coin. This is a $3 billion asset with real on-chain economics, real usage, real institutional interest, and a publicly verifiable halving schedule. Here is my take, and I will defend it. Every other crypto project that tried to front-run artificial intelligence turned out to be a narrative coin with no protocol underneath. TAO is the opposite. Bittensor built the protocol first, the subnet marketplace second, and the narrative came last, which is exactly the order you want to see. The Jensen moment was not the catalyst. The Jensen moment was the confirmation this is a fixed supply, halving driven, live decentralized AI network that the CEO of Nvidia just publicly validated. You don't get many setups that clean in crypto. So let me separate signal from noise because this asset will absolutely fake you out short term. Ignore the hourly chart, ignore the Is Covenant coming back Twitter drama, ignore every thread that tells you subnet alpha tokens are going to 10x next week. Most of them are going to 0. That's the design. What actually matters? 1. Real inference demand on top subnets, Chutes token throughput, open router rankings, paying users. 2. TAO emissions schedule were post first halving, second halving roughly 2029. Supply dynamics matter. 3. Institutional flow, Grayscale holdings, Foundry validator stake, any new sovereign or treasury exposure. 4. Governance evolution, whether the conviction mechanism actually decentralizes the foundation's control. 5. Macro AI narrative, Nvidia earnings, OpenAI funding rounds, regulatory posture towards centralized AI. That last one matters more than people think. Important caveat, this is a volatile asset. It dropped 27% in 2 hours 10 days ago. Size accordingly. This is not financial advice. Do your own research. That's non-negotiable for a video like this. So what would force a real re-rate from here? 4 things I'm watching. 1. Subnet maturation. If 3 or 4 subnets emerge with genuine product market fit, real revenue, real external users, not just Bittensor native speculation, the whole protocol re-rates. Chutes is arguably already there. 2. A Bittensor ETF filing or any institutional wrapper. The precedent is Bitcoin. TAO is close enough to a Bitcoin-shaped asset structurally that it's a credible future filing, and Grayscale already has the product infrastructure. 3. The conviction mechanism fixed to governance. If the foundation's grip actually loosens and the network survives it, the decentralization story becomes true, not just marketing. 4. Continued macro AI tailwinds. Every Nvidia earnings beat is indirectly a TAO catalyst. My 12-month stake in the ground, I think TAO retests the previous all-time high of 700 plus sometime before the end of 2026. That's a roughly 2x from current levels if subnet adoption accelerates and Grayscale launches a wrapper. Materially higher is on the table. I'll defend that range in the comments. TAO at $300. 21 million hard cap, a fully live decentralized AI marketplace, Nvidia's own CEO comparing it to folding at home on the biggest tech podcast in the world. I bought this one at 8, and honestly, I think the most interesting part of the story might still be ahead of us. For the full sleeping giants list, the research and the receipts, everything is on X at Cryptos Giants. Link in the description. Drop a like, subscribe for more deep dives, and as always, not financial advice. Do your own research. I'll see you in the next one.